Welcome back to Reimagine 2020. I'm Yonah Hochhauser, and today I'm joined by Joshua Frank, founder of The Tie. Joshua, thanks so much for joining us.
Thanks for having me on.
Well, Josh, first, tell me about The Tie. What is The Tie?
Yeah, so I guess for lack of better words, we were a spinoff of the leading provider of sentiment data in traditional asset classes. So a company called S&A, which is providing data to your Fidelities, Barclays, CMEs of the world across equities, futures, Forex, fixed income. And about 2.5 years ago, we realized that, hey, if you can use sentiment data, right, the wisdom of the crowd to predict movement of traditional assets that have, that have fundamentals, like if you can predict the movement of Apple stock, despite the fact that it has earnings, revenue, and dividends and things that are fundamentally driving the value of that asset class, in crypto where there are no fundamentals, the only thing is sentiment, right? So we started as, the leading provider of sentiment data to the crypto space. And with that, brought basically 10 years of technology that was developed to service the largest traditional hedge funds and asset managers. And so that's kind of how we got started, but have since moved into a number of other data sets, including our SigDev product. And I guess broadly speaking, the best way to define The Tie is the leading provider of alternative data for cryptocurrencies. So we're looking at everything that's not market and not on-chain data. And so we service a number of clients with that, but our clients are basically, they have one kind of need in mind, which is I want to make better decisions using data, whether that's, a publication or a hedge fund or a law firm or whatever else. It's I want to use market moving crypto data to make a more informed decision.
Interesting. You guys are providing alternative data for alternative currencies. Very apropos there. Now, before we get into, SIG data and your new stuff, let's first on your original core business, which was sentiment analysis.
Sure.
I find it very interesting, because everyone's heard of fundamentals and technical analysis, but sentiment analysis is fairly new because it was traditionally very hard to get a sense of the crowd in real time. How accurate is sentiment data, in terms of predicting or even analyzing past movement, first in traditional markets where you said it originally came from, and then now in crypto? Is it better or worse in crypto?
Yeah, so look, there's different ways of slicing and dicing data, right? And it also comes down to the quality of the sentiment data that you have, right? It's not enough to say that I have sentiment data, because that can mean a number of different things. Like the way that you, for example, monitor or measure the wisdom of the crowd or investor sentiment can be very different. So the way that we think about investor sentiment is we ingest the full Twitter fire hose, which is the full real-time stream of 1 billion tweets a day. What we first have to do, and this is one of the biggest steps that a lot of companies miss across not just this market, but any market, is trying to assess whether or not a particular tweet is relevant to a particular asset. So if you see a tweet on Dash, well, it could be on a Dash for charity. It doesn't necessarily have to be, Dash the cryptocurrency, right? If you see something on EOS, it could be on Canon's camera called EOS, right? So when you're quantifying investor sentiment on a particular asset, you can't just go to Twitter, type in EOS and assume that you're gonna be able to produce something that gives you actionability on EOS, right? You have to actually assess whether or not, based off the context of the user talking about an asset and the rest of the tweet, whether or not that has anything to do with the actual cryptocurrency. So the way that we quantify investor sentiment is we'll take in all the tweets, we'll say that this is related to X or Y or Z currency. What we'll then do is we'll then try to assess whether or not it's a real account. So one of the other biggest challenges in the crypto space is fake trading volume on exchanges. And, you covered this a lot at Block TV, and, we've discussed this in the past. But the same thing goes with Twitter activity, where, close to 90% of the tweets on certain assets, not all assets, but certain assets are from fake accounts. Like, why would somebody put, Digibyte in the name of their account, right? Or whatever other, and I'm not picking on the Digibyte community. There are plenty of real people in the Digibyte community, but my point just being, there are fake accounts that discuss particular cryptocurrencies. So we have a 13-step process for weeding out those accounts, because if it's not a real account, that's not part of investor sentiment, right? That's just somebody trying to manipulate it. And then we have a dictionary of over 100,000 unique terms. So in every tweet, we'll score every single word individually. So if we see, for example, Ethereum to see surge in price after Yonah promotes it on Twitter, we'll score the word surge and promotion positively. And then so what we'll end up doing is we'll create a quantified representation of tweets on a particular asset. So let's say, you know, we'll create a metric that says sentiment on Ethereum is 2 standard deviations more positive today than over the last 20 days, or tweet volume on this asset is up 50%, or whatever else. So basically, in short, the process is take in every tweet, say it's related to this asset, remove the crap, score every word, and then create an overall representation of investor sentiment on a particular coin versus itself. So we don't compare, you know, tweets on one coin versus another one, because there can be problems with that. So for example, you know, the XRP army was really big in 2018. It's since, you know, fallen off a little bit. But the average XRP tweet was always more positive than the average Bitcoin tweet. So it would be wrong to say that XRP sentiment is more positive than Bitcoin today, because XRP sentiment can actually be more negative than it normally is, which is a bad thing, right? So what you have to do is say Bitcoin sentiment is more positive than it usually is, or XRP sentiment is more negative than it usually is. So across those different metrics, in equity markets, we've seen that on its own, it can be powerful, but it's really powerful as part of a multi-factor model. So when you take in 20 or 30 different data points and sentiment is used to augment or improve your model, within crypto, we've seen a much more significant degree of predictability than in equity markets. And that's due to the fact that there is much less data, that there are no fundamentals, right? Like you're not gonna have a Bitcoin earnings report that said Bitcoin made $50 billion exceeding investors' expectations. Like that's not gonna happen because it's not relevant for this industry, right? So just an example of that is we launched what's called a copy portfolio on eToro, which basically is an account that investors can copy, and it rebalances every month using our sentiment data. And since launch, despite eToro's, you know, fee structure, which is, you know, a little bit high on certain assets, it's more than doubled the performance of Bitcoin in public trading. So and that's just a sentiment-driven model. There's nothing else that goes into that model, and that rebalances once a month, whereas we can get down to the 300 millisecond frequency for certain clients. And so broadly speaking, you know, we've seen that sentiment can be very predictive, but positive sentiment doesn't always mean positive price movement, just as a you know, kind of something to note.
Well, you spoke about this idea that you guys, it's not just having sentiment data, but good sentiment data. You guys are especially good at filtering it down, you know, to see if it's real, to see if it's valid. I'm sure that took a tremendous amount of time. Do you feel that at this point, your filtration system for tweets is probably even better and more accurate than Twitter's? I mean, you're obviously going for much more niche, but if you're searching for filtering out crypto-related messages, you probably have a better filtration system than Twitter does.
Yeah, and look, we work with Twitter. You know, the company that we spun off of is one of, you know, 4 financial data companies globally that's partnered with Twitter. So we're an official Twitter partner, and they work with us to do financial data. So we, you know, that's you know, what we work with them for. So we're gonna, you know, just being able to focus on any specific niche just gives you more expertise, right? You know, broadly speaking, Twitter is probably better at 999 other industries, or 9,999, whatever it is, you know, infinite more industries than we are. But when it comes down to a niche, like, does Twitter know what the word hodl means? Does Twitter know what the impact of an exchange listing is? Does Twitter know what Lambo Moon means in the context of a tweet? And that's why we spun off from this traditional finance companies, because on their own, they couldn't service this industry, even having financial expertise, because crypto is just so different.
Mm-hmm. And, you know, you guys started off more as a retail data platform, and now you guys, you know, you guys kind of shifted over, at least from my view, into a more B2B play. You want to tell me why you decided to start off in the retail market, and then why you guys decided to shift over to more of a business to business?
Yeah, so when we first started in crypto was, you know, early 2018, late 2017, and the market was just not, you know, ready for institutional focused businesses or enterprise focused businesses. So we started as a retail company, realized pretty fast that it's just not something that we were, you know, we're not experts at marketing. We're not experts at, you know, retail customer support, any of those kinds of things. And we realized, you know, we'd be much better served as a B2B to C play or as a B2B play. And that, you know, we started to see a tremendous takeoff, you know, slowly, but, you know, building up momentum of institutional adoption of digital assets. And realized that finally there was, you know, we started as, you know, B2B and other asset classes, that there was an opportunity for us to play in that market. And we've, you know, grown exponentially since making that switch over to B2B, but we still are doing B2B2C. There's lots of partnerships that we've made both publicly and some that haven't been announced yet, which are bringing a lot of our data back to the public. We believe in, the idea of, crypto is all about democratizing finance, right? And for us to just do a bunch of things and to make them only accessible to investors that have more than $100 million in assets under management, I think is contrary in some manner to the whole decentralized nature of cryptocurrency. So we're looking for partners and ways to commercialize our data to the public, and certain aspects of our data to the public. And so we signed an agreement with a company called CoinMetro, for example, which is a small exchange in Estonia. They're bringing our data to the public. We've just signed with two of the biggest research companies and media companies that I'm sure your listeners know about. Those announcements haven't gone public yet, but we're bringing a lot of our data to the public. So we're working through intermediaries, but also we've seen a big takeoff in institutional demand.
Right. And I feel like you have, a much better or a pretty good finger on the pulse when it comes to institutions, because the first thing institutions want to know when coming into a market, besides stability and some sort of regulation and some sort of, non-manipulation, but they want data and they want good data. So I'm sure the institutions, you're one of the first stops that they go to when thinking about entering the market. Have you seen an uptick in institutions coming in since Corona? Has it been an uptick, a downtick? Has it been slower? And secondly, when we're talking about institutions, is this only, funds and firms, or are we also talking about Wall Street types of big players?
Yeah, so we've definitely seen, I've been getting calls from people that I had no idea knew anything about crypto. I talked to one of the biggest traditional brokerages the other day, multi-billion dollar fund, had no idea they had any interest in crypto, and they were thinking about starting their own internal hedge fund to trade crypto. No idea these guys touching crypto. But mostly what we're getting inbound on is family offices and traditional, quantitative hedge funds that are interested in crypto. It's not so much, we're not hearing anything from pensions yet. I think we're still small. We're too small for that, for that market, but we're starting to see a lot of inbound from people that, one, I didn't know how they found us, and two, just surprised that they're in this market yet, but it's very much still exploratory. We have a number of customers that are, willing to pay for our data just to explore the market, or just want to we're like, hey, we may get into this market in 6 to 12 months. We just want to get an understanding of the landscape. Would you guys mind if we trialed your data for 2 or 4 weeks kind of thing? Mm-hmm. And so we've gotten, I would say more people are in that boat than in the first boat. But we're getting very much like, hey, it's in our plans for next year or the year after to enter crypto. And we're actively monitoring.
I find it interesting because not only does a traditional, financial institution, or an investor or, institutional investor have to be sold on this new alternative type of money, this new technology, but, even Twitter data, investing off of Twitter sentiment, you mentioned that it comes from a traditional thing, but it's especially, pointed, it's especially relevant to cryptocurrency. So do you also try or find that it's a tough sell to sell to, these more traditional, even family offices, to try to sell them on, hey, no, this data might not be the most relevant data when it comes to traditional finances, but in this crypto sphere where there is no real fundamentals, this is really necessary to give you a picture on this new asset class.
So funny that you mentioned that. So kind of two points. The first is our sentiment data is a much more easy sell to quantitative investors. If you're a discretionary asset manager, it's generally speaking, it's not always, but generally speaking, it's much more relevant if you can actually build, models, quantitative models to algorithmically trade off the data using sentiment as a factor in those models. So broadly speaking, it would be hard to go and sell sentiment data to a traditional fund that has no quantitative capabilities, right? That are only just discretionary trading, in assets, because there's obviously value in the data, but you can also just monitor the market, on your own. But earlier I mentioned a product called SigDev. So as we were going out and as we were selling sentiment data to funds, we realized that even more fundamental than sentiment data, nobody had any way to monitor this market, like what was going on in this market at all, let alone like investor sentiment. So like if you look at the equity market, traditional investors are used to standardized disclosures, right? Companies have SEC filings. They announce their stock splits, their stock buybacks, their dividends. They have, you know, earnings calls and all that kind of stuff, right? And broadly speaking, if you're a US listed security, there's, you know, the SEC, which will regulate you, right? Or the CFTC or whatever else it is. We realize that in crypto, because of both the decentralized, but also I would say disorganized nature of this industry, there's no standardization of information. Like there's no one portal where you can find out everything that token projects are doing. There's, you know, hundreds of different global regulators that can rule on digital assets, and those rulings can have a significant impact on the market. So what we realized was needed was a way to track all this information. And so we spent over a year and a half very, very quietly, because we didn't, you know, we wanted to just be building, trying to identify where information in crypto originates. So for example, where is the first time that a partnership is announced in crypto? Is it, you may see it in a publication, but a publication, and you would know this, you know, from your time at Block TV, found it somewhere else first, right? It didn't originate in the publication, right? If a regulator in Malta ruled on cryptocurrency, you know, sure, maybe X publication wrote a story on it, but they had to find it from some regulator, right? So we realized, you know, we need to go to the source to identify this information before it goes public. So we built technology that goes out and basically crawls from over 1,200 unique sources in real time. So we crawl everything from, we're parsing through every single SEC filing in real time. We parse through 23 different filing types to look for every mention of crypto. So for example, the second that eBay decides that they want to start taking crypto payments, we will pick that up. The second that Apple decides that they want to hold Bitcoin on their balance sheet, we'll pick that up. We parse through every court case in the United States in real time, every regulatory ruling in the United States. So
every single court case in the United States is going through your filtration system?
Any federal court case. So nothing, not at the county level, but anything that goes to like a, like the Southern District of New York or anything like that. We're picking up any court case looking for mentions of crypto. We pick up every regulatory ruling, not just at the country level, not just in the U.S. State Senate and State House, but at the state level. So when the Nebraska State Senate is talking about digital assets, we're picking that up. When the Idaho State House is talking about something, we're picking that up. You know, central bank announcements, you know, think tank announcements, you name it, but also at the token level. So we parse through every forum, every blog, every medium, every, you know, news site that they have, every exchange, you know, we'll parse through all those different sources, you know, you name it. Anywhere that anybody could possibly be first talking about anything to do with crypto, we're hitting. And so what our system basically does is we'll pick up all these different things and it will tag them. So just like I mentioned earlier with like the EOS example or the Dash example, you know, you could, for example, have a regulatory ruling mentioning ETH, and that could be on Ethan Allen, the home furniture company, not Ethereum, the cryptocurrency, right? And so our system is able to assess whether or not it's relevant to any particular asset. But it's not enough just to say, okay, here's you know, a stream of 8,000 different articles on Ethereum today, because that's overwhelming. What we did is we looked towards, you know, some comparables in the equity market, like corporate actions, and we built what we call SIG devs, or significant developments for cryptocurrency, which are things like partnerships, staking announcements, listings, hard forks, token burns, M&A activity, regulatory rulings, et cetera. And basically our system in real time can say, hey, this is a listing of you know, Ocean on Binance. And, you know, most of the time we can send an alert out to our clients of that before they even tweet about it. Or we can say, here's a partnership between X and Y and Z entity, or here's a regulatory ruling between this, and that. And so for those that are trying to stay on top of the market in real time, you know, it's the best solution for them to find out about critical information. So we actually work with the 2 biggest publications in terms of viewership in crypto, use our service to write the majority of news stories that they publish. So we're kind of the news before the news. You know, we work with hedge funds. We work with exchanges that are using the data internally. We're working with law firms that are fighting, you know, legal cases. And so with our data, we can actually show you, for example, how a story moved the market. So for example, there was this new issuance of, let's say USDT. What was the impact of the price of Bitcoin after an hour, after 24 hours, 7 days? What was the impact on investor sentiment? So we could see if there's manipulation by looking at how specific news stories have interacted with the market, what the average price impact of an exchange listing is, or this or that. And so, you know, anybody who's trying to stay on top of this market in real time needs that information.
Wow. And are you able to take, you know, all that data and also throw it through your sentiment filter? Like, can I check to see which county or which federal court in the US has the most positive sentiment on Ethereum?
So we're not doing that yet, just because it's not super relevant.
Just for the
But
shits and gigs.
no, hypothetically we could. The reason, I guess not super relevant is not the right word. The reason we don't do it is just the sample size is too small. So with Twitter, we're parsing through like 80 or 90,000 crypto tweets every single day. Whereas like a federal court may write about Bitcoin one time in 3
Right.
years. So it's hard to quantify the average impact, but we've certainly thought about it. But we combine the data in a lot of different ways. So what we'll do is we'll see, hey, this news story came out. What was the impact of investor sentiment on Twitter after that story came out, or on price movement? So we can see how the market is reacting to these specific significant developments without actually quantifying the sentiment of those specific developments.
Right. Now, what are your thoughts on and what does the sentiment say on the recent, DeFi mania that seemingly, taken, this is the next big thing, in blockchain and cryptocurrencies. DeFi is very, is hot right now. What are your thoughts on it? And kind of, have you seen anything in the data on it as well?
Yeah, I mean, so we're certainly seeing a big spike in DeFi, and I wrote a piece we produced a quarterly report with eToro on the state of crypto, and so I wrote a piece on kind of this DeFi mania. And what we're seeing across a number of our data sets are, one, DeFi is a really big thing, but it's a really big thing within crypto is what we're seeing. So if you look at like the number of publication mentions of DeFi, it is skyrocketing, but for the most part, those publication mentions are within crypto. It's not like we're seeing Fortune magazine at this point writing about DeFi yet. So it's very much concentrated. And what we've kind of seen is that it's a number of the same accounts talking about these things. But it's definitely growing. It's growing within crypto, but it's still kind of constrained to crypto. My thoughts are different than a lot of others in the community. I very much worry about risk and smart contract risk. And we've seen so many hacks of these things. In Q2, we saw 5 major hacks. We saw D-Force got hacked for $20+ million. And when you're taking one token and you're yield farming, right? You're borrowing this token and lending it out here, and then borrowing here and doing this and doing this and doing that. You're just exposing yourself to so many different protocols that, in a lot of cases haven't had their code audited before. You may be buying, smart contract insurance from a decentralized, smart contract insurance company, but has their code been audited? So one thing that I worry about is we're still a little bit early in terms of, there are, look, the reason that, these things are taking off, just has to do with the yields that they promise, but the yields that they promise only exist because they're yields in a lot of times their native token, which do you really want to have their native token? And there's also a tremendous amount of risk that you're undertaking there. So we're seeing it grow. It's definitely growing. It's undeniable that it's growing. But I think there's a tremendous amount of risk that's associated with it. And I don't think that we're anywhere near mainstream, I guess, pickup of DeFi, just because of how difficult it is. Like, I don't know if you ever use DeFi, but first you got to go take your fiat and bring it on and get crypto. Then you have to get a MetaMask wallet and interact with this and interact with that, and convert your Ethereum or convert your Bitcoin to wrap Bitcoin, and then your wrap Bitcoin, bring it to whatever protocol. And it's not the Cash App where you can go and you can click one button and buy Bitcoin. And I think we're still really early. I think there's certainly some promise here, but I just worry that, maybe we're getting ahead of ourselves as an industry a little bit much. It feels very much like the ICO bubble did to me, where, like with YAM the other day, going up to whatever it was, $10 or $180 and crashing to 10 cents or whatever stupidity there, because, there was a bug and it was, quote unquote experiment, but how many experiments do we need to have with people losing $20 million before we say this is a problem?
Right.
And so, that's kind of my take on it, but also I'm just worried that this just reflects poorly on our industry, right? If we want to bring in the biggest pension funds into crypto, we're not going to get them in by talking about yield farming yams on DeFi and earning 220% annual returns on a liquid shit when the price of gas is moving up to, $30 to make a transaction on Ethereum. We're early, and I think it's not a great look for our industry.
Mm-hmm. Oh, that's DeFi. How about Bitcoin? What's the current state of Bitcoin sentiment happening right now? I mean, Bitcoin it broke the 10K resistance and already for a while now. What's Bitcoin sentiment at?
So yeah, the interesting thing to note is we've certainly seen an increase in the number of people talking about Bitcoin this year. And so I think I don't have the exact number off the top of my head, but it's somewhere around a 50 to 60% increase in terms of the number of people talking about Bitcoin, which is a massive increase. But keep in mind that, that's still lower than it was in July of last year. And I think you probably remember the President Xi announcement with China, blockchain that led to the last spike that we had up to the 13, 14K price range. And there were more people talking about Bitcoin back then than there are today. But we're near those levels, certainly. But one thing to keep in mind is it doesn't matter, it doesn't just matter that a lot of people are talking about them. What matters is how positive they are. And what we're seeing is that on average, the average person talking about Bitcoin is more positive than they've ever been at any time in the past. So the average tweet is more positive today than it was in the past. So I think that that's quite interesting. But I also think one thing that's interesting is we created a metric which basically looks at market cap as a multiple of Twitter activity. And we kind of use that as a gauge of potential institutional interest in the market. Because if market cap is trading at a significant premium to social activity, that can mean that you have bigger, whales in the sea, I guess, for lack of better words. And so we're seeing now that market cap is trading at a very high, multiple of Twitter activity, which may mean that, this rally is not just purely a retail driven rally like we've seen in the past. There's actually institutional activity supporting this rally.
Do you have another example? I don't know if it's off your top of your head, but do you have another example of a project that you're seeing that has that big percentage or that big discrepancy between market cap and volume and Twitter volume that is under the radar that we might not think comes to mind, but you have this before anyone else?
In terms of I think the most institutional trading is definitely focused on Bitcoin. I think on the other end of the spectrum, we see coins that are trading at very low multiples of their Twitter activity. And we saw that originally with Chainlink a few years ago, where Chainlink was trading at this very small premium to its social activity. And this large community was able to bring in more people and more people and more people to the point where the Winklevis are at Dave Portnoy's house pitching him on Chainlink, which is just what the fuck. But so there are a number of coins like that. I can't think of any off the top of my head, but there are a number of coins that are seeing large increases. I'll pull a couple up. I might as well.
Well, I like that you brought up Chainlink. If you could bring up Chainlink, so we could dive a little into that sentiment. If you're able to pull up that data for Chainlink, because that is the kind of one of the hot topics these days, where there are people on both sides of it, whether they think that hey, it is the oracle to end all oracles, and this is what's going to power DeFi. And then there are others who are saying, hey, every exchange, every big place has their own oracle. We don't need Chainlink. So I would love to see what the sentiment is there, what your numbers are able to crunch on that.
Yeah, I can share my screen here on something that you got to just enable attendee screen sharing super quick.
Okay.
So here we go. So this is just really quickly, I just had this on my desktop. So it's a couple days old. It's as of August 12th, but this looks at the 30-day average tweet volume versus the market cap dominance of Chainlink. And this isn't the exact chart I wanted to show, but we actually tweeted something out. Something absolutely wild is that Chainlink went from accounting for less than 0.1% of all crypto tweets 2 years ago to a high of last Saturday, 14.2% of all tweets in crypto, wow, which is just insane.
That's insane, yeah.
There have been a couple days in the last month where Chainlink's tweet volume is this close to surpassing Ethereum's, just for context on how massive it's become. I don't know if I necessarily have the best answer in terms of what type of oracle somebody needs to use or anything like that. I mean, I think the oracle problem is definitely a real problem. Whether or not Chainlink needs to be valued at $6.57 billion is definitely up to question. I don't know why connecting data to a blockchain is worth $6.6 billion personally.
These numbers that you're giving, this is with filtering out fake accounts. So you're saying this is up to 14% of real tweets of crypto tweets are talking about Chainlink. That is quite high. So what can we parse out from this data? You're saying it has a very low multiple of Twitter to a market cap.
Well,
Does that it just
it has a it has a normal hype level. So before its market cap wasn't trading at a huge premium to social activity. Now it's in line with other coins. So what we basically define as normal, I don't have the exact threshold, but basically if a coin trade has about one tweet per $1 million in market cap, that's generally normal. And that's somewhat akin to what Chainlink is at.
Mm-hmm. Wow. Okay. Very exciting. Well, you, like we mentioned before, you are a data provider, both with, B2B and B2B2C plays and institutional investors. Do you get a sense or a feel, or maybe they even express to you, what barriers of entry that they see for continued adoption in crypto, where, they're asking for certain things, or like, they're, like we said before, they're coming to you to kind of explore the field. Do you get a feeling in a sense of kind of what their worries are and what they're waiting for to see in crypto until they jump in?
Yeah, and I think that one thing that people don't do is separate the market. To me, there's Bitcoin and then there's everything else. And in the retail space, maybe that's the same, right? But from an institutional point of view, it's different, right? From an institutional point of view, Bitcoin is relatively liquid. You can trade, CME options, futures and options on Bitcoin. There is a lively options market, right? There's liquidity on a number of different platforms. It's been in existence for 10 years. So with Bitcoin, it's quite different. With these other coins, it differs in that a lot of times these coins aren't liquid. So we could, for example, have a great trading signal on a coin, but if you were a large institution and you wanted to move $2 million, well, you'd move the price 40% on your own.
Wow.
So one of the biggest challenges is just lack of liquidity, or lack of, ability to trade these assets in the market. It just, once you start getting down the list, the further you get down the list, the less capital you can trade. Another major constraint is actually just having capital to deploy on these signals. So for example, you could have a signal on, let's say, whatever, coin ABC. I'm just making up a name, right? So you could have a signal on coin ABC, but you only have an account on Binance, Coinbase, Fobi, OKX, FTX, Bitfinex, and Bittrex, which is already ridiculous, but coin ABC doesn't trade on any of those exchanges, right? Or coin ABC may trade on Bittrex, but all your capital is on Binance. And so it takes time to move your capital from one exchange to another. We don't really have proper prime brokerage yet in crypto. There's not really a way to have capital in one place and deploy it across a number of different exchanges. So let's say you want to buy $2 million worth of a particular asset, and that if you traded $500,000 on 4 different exchanges, the price would be okay. But you may only have $2 million on one exchange that can be moved into that coin. And so you're going to move the price by significantly more by moving it on that exchange. So one of the biggest challenges is still just having the proper liquidity to trade it. From talking to our quantitative customers, what we hear generally is that the average, trading strategy that they have has a limitation of about $10 million in terms of the actual amount of capital they can deploy behind any individual trading strategy. Depends on the client. Obviously, some go more, some go less, but that's broadly speaking what we've seen. So that's a challenge. Regulatory uncertainty is always a challenge. Another challenge is just compliance nonsense at larger institutions, right? Just getting buy-in for something from a compliance point of view is like, you could have 70 people at a large financial institution that want to trade crypto, but you have to go through 6 or 7 more, layers of getting this person's approval to get this person's approval, or this person has to approve it, but they have to go back to that person to approve it to go to that person. And so you just have, I think it's just a matter of time with a lot of these things, right? I think institutions are going to start playing in Bitcoin. The narrative is certainly switching to one of a digital gold. And we see that every day on Twitter. Digital, gold is constantly the most used word on Twitter as it relates to Bitcoin. And the average tweet on gold and Bitcoin has been positive 65, 70% of the time. So there's definitely a positive connotation between the two ideas. So I think, especially in light of the pandemic and the Federal Reserve printing an infinite amount of, seemingly infinite amount of cash, that digital gold narrative is going to take off more. So I think we'll start to see institutions come in, but I would guess that they come in with Bitcoin first, and they're not falling down the alt rabbit hole. But something that we've seen, thing to keep in mind, is that when nobody's talking about crypto, buy Bitcoin. When your grandma starts talking about Bitcoin, buy altcoins. I mean, that's kind of the pattern that we've seen. where, when Bitcoin takes off, these altcoins just surge and go crazy. And I think that that's, a combination of, one, sometimes people will look at the price of Bitcoin and be like, oh, this is too high, despite the fact that the only thing that matters is percentage return. Price doesn't matter. But also they're like, oh, I missed the boat on Bitcoin. I need to get into these alts. And because alts don't have a lot of trading activity, there's a big opportunity for those to surge. So I think we'll continue to see that. But I think institutions are going to start playing in Bitcoin before they, fall down the alt rabbit hole.
And where are we in your data? Where are we on that? When no one's talking about Bitcoin, buy Bitcoin, no one, like, where are we on that list? Are we at the sell everything stage? Where are we on that time?
I don't know if your grandma's talking about Bitcoin yet, but we're at 12.2 right now. And if we start hitting 15 grand, your grandma's going to start talking about Bitcoin. So,
Sure.
I think, but look, I'm personally just a long-term holder. I buy every dip I can and just accumulate. I don't actively trade. I think it's, look, we're a data provider in a space where there's not a lot of data, and I don't want my customers to feel like I'm trading against them. So I don't actively trade or hold any positions other than Bitcoin. So I'm just holding. I buy dips. I don't get concerned with small dips intraday or movement. But look, I mean, we're seeing alts continue to move. I mean, like, Dave Portnoy didn't just want Bitcoin. He also wanted something else, and he moved into Chainlink, right? So we're starting to see that a little bit as well, for sure.
And I think something that not many people discuss, or it's not really talked about, because I think we're a little early. But I was wondering, you mentioned that you get approached by a lot of different institutions and organizations that you thought would never have heard of cryptocurrencies. Have you ever been approached by any government entities, agencies, or anything like that for your data?
Yeah. Yes. So governments want to regulate crypto. There are a number of government agencies that have contracts out for monitoring the space, especially monitoring news and regulatory developments in other countries and what these projects are doing. A lot of these DeFi projects are running rampant free, not registering themselves as securities. And the SEC and other, entities, are not, naming specific ones. These are just, random, let's say the FCA or whatever else, are certainly monitoring from a distance. And as we've seen with the ICO bubble is, just because you got away with an ICO 3 years ago doesn't mean that you're still in the clear. And so government agencies are certainly keen on following this industry. And I think a good example of that is, they're one of the most successful, if not the most successful, data company in the space is Chainalysis. They were the ones that helped crack down on this. I don't know if you saw the other day, Al-Qaeda was using crypto for terrorist financing. Chainalysis helped the U.S. government crack down on that. They helped the U.S. government identify the Twitter hacker. And so there's governments are certainly following. Governments tend to be slower moving, and there's regulatory nonsense that goes on, as we've seen with the coronavirus response in the U.S. As the best prime example of how not to run a government. But we're going to start seeing. I think you'll start seeing a lot more government regulation because governments are certainly interested.
And the last question before I let you go, what has you most excited about the crypto space going forward?
Yeah, I mean, I think I'm excited by all of this traditional institutional interest that we're finally starting to see. And I don't think it's going to be, a lot of people thought when we launched, the CME launched in 2017, December 2017, that it was going to be a straight shot up. And it's not going to be a straight shot up, right? We're not anywhere near there. But I think that the conversation around crypto is look, there's still DeFi mania and a lot of nonsense that I personally think is going on there. But as it relates to, we're not seeing the same level of scams that we were seeing in 2017. We're not seeing utility tokens that actually serve no utility go to the moon, right? We're seeing a real narrative behind Bitcoin take hold. We're seeing stable coins have actual utility and reasons for moving to a digital dollar. And I think, the next generation of investors are looking at Bitcoin the way that this last generation looked at gold. And I think as more young people come into power, in different levels of government and different levels of companies, their comfort level with Bitcoin is now the same as the comfort level of an older generation with gold. And that's just absolutely massive. And so that's what has me excited. The fact that I think the conversation is headed in the right direction and the right sorts of players are starting to get interested in and dip their toes in the water.
Josh, I appreciate you taking the time and filling us in on a little bit about sentiment data and the tie. Thank you for taking the time. And for all our viewers at Reimagine 2020, I'm Yonah Hochhauser. Thanks for watching.